Welcome back to the Trader Vision 2020 video tutorial series. My name's Ed Carter. I'm the architect behind Trader Vision, and in today's video we'll talk about trading psychology and our trade grading tool. In particular, we're going to talk about why trading psychology matters, about the components of trading psychology, which are discipline, cognitive and trading errors, and emotions, and then we'll look at the tool itself for grading trades. Frankly, this will be largely a lot of discussion and then a look at the tool, but how you use the tool will really come down to your own approach. You need to come up with a standardized approach, and we can only go so far helping you in that way. So let's start by saying that, contrary to what many traders say, the big problem preventing most traders from being successful is not some market maker or a big money fund taking advantage of the little guy. Nor is the problem that they don't understand the trend or just have bad luck. The vast majority of the time, failing traders did it to themselves. They were their own worst enemies. In fact, most failures come down to two things. One, not understanding price action, which means they didn't educate themselves. And secondly, poor trading psychology. So what do I mean by trading psychology? Basically, it has three components: discipline, mental mistakes, and emotional control. And quite frankly, emotions are the direct drivers of the other two, because out of control emotions put us under pressure, and that causes us to break discipline and make mistakes. In today's video, we're going to talk about how Trader Vision helps you to get control of your trading psychology and systematically work to improve it. Now, we've already talked about having trading rules and validating every trade against those rules, against the amount of risk that's being taken, against the total reward that's possible, and against the reward to risk ratio. We've also talked about planning trades so that you know all the potential scenarios, you know what you're going to do at each price level, you take profits along the way toward your trading goals, and you continue to reduce risk as you manage trades. In this video, we're taking a look at the hardest part, and that is taking a brutally honest look at your own performance and all the aspects of your trading psychology during every single trade. You may not believe it, but where your trading psychology is at, in other words, where your head's at, during a trade is at least as important as your chart reading skills or the overall market conditions. Trader Vision 2020 trade grading gives you a tool to take that hard look at yourself, at your discipline, your mental and trading mistakes, and at the emotions that drove them. And by recording these things and identifying the patterns in your behavior, Trader Vision arms you with a tool to help you correct those problems and improve your trading. So let's take a look at the tool. I'm not going to cover trade validation or trade planning. We've already covered that before. We'll skip right ahead to this small little section in the lower right-hand corner of Trader Vision. It looks very innocuous, but it can be very powerful if you use it and you set up a strong system to systematically look at what you're doing in all three of those areas. For every single trade, you need to grade on a 5-point scale how well did you maintain trade discipline. You need to come up with objective criteria to help you manage that. In the future, we will try to come up with something to suggest particular criteria to use. But for now, you need to come up with the criteria that work best for you. The second thing that you need to do is, again, for every trade, you need to record all the mistakes that you made. I strongly suggest that you look into the topic of behavioral finance. You'll find that there are a whole list of mental fallacies or mental errors that we make that cause us to do things. There's a famous story of the legend of the man in the green bathrobe. And the moral of that story is that it's not house money. When you're up several $1 million, that's your money. And letting it ride doesn't mean that you lost $5 if that's what you put into the trade. It means that you lost several $1 million. That's just one among dozens and dozens of mental fallacies or cognitive errors that we have as humans. There are also trading errors. So these are mistakes that I've made, both mental mistakes as well as trading mistakes. What do I mean by trading mistakes? Well, maybe I chased an entry for fear of missing out. Maybe I set my stop too tight because I was afraid of losing any money. I got nervous during a trade and was scared out early. Or I got greedy. I didn't take any profits along the way. I was looking to hit that home run. Or many more. As long as you use the same term each time you grade yourself, we'll be able to look at your performance under each of these scenarios, under each level of trade discipline, under each type of mistake that you've made, and identify the patterns and say, man, I need to get my discipline under control, or I need to stop chasing entries, or I need to stop setting my stop too tight because that's just leading to a death by 1,000 paper cuts. And then lastly, look at your trade emotions. So at the time of entry, what were you feeling? You've got to learn to know yourself. You've got to know that when I'm happy and giddy, I shouldn't be trading. Or maybe it's when I've had a bad day and I'm angry, I need to stay away from the brokerage because it's killing me. Or whatever it is, you need to identify what emotions you have as you enter a trade and then track those things and track the performance against those emotions at the time of entry, during the trade, and at the time of exit, so that you can come back then and look at your performance and say, when I'm greedy at entry, that's a good thing, or that's a bad thing, or it doesn't make much of a difference. Having this information informs you where you need to focus your effort. If the problem is that you're setting your stop too tight, then you need to make sure that you have a stop of a certain percentage or a certain number of ATR, using a volatility stop or some other way to give a trade a chance to work. Otherwise, pass on the trade. If you're chasing entries, you need to set those entry triggers so that you're not chasing those trades and paying too high a price right before the stock is going to reverse on you. You need to learn to take those profits along the way toward your trade goal. Get that trade goal off the table as soon as you can. All of these things will help your trading. That's really all I wanted to cover in this video. I wanted to give you a brief look at this tool. It seems innocuous, but it could be very powerful if you let it. We can talk about this during the weekly workshops or during the monthly workshop, but we need to come up with standard ways to evaluate yourself so that you objectively know that you're improving your trade discipline, that you're eliminating mistakes that you've made in the past, and that your emotions are in the right place before, during, and after a trade. Or I guess I should say before, during, and at time of exit of a trade. Again, I want to thank you for watching. I appreciate your time. Look forward to another video here shortly. The next one may be power user tips, if I'm not mistaken. And Doug may even do that one for us. And again, I will see you at the weekly workshops or at the monthly workshops. In the meantime, thank you so much, and I look forward to talking to you soon.